We're here in Toronto with our friends from Node Blockchain. We're going to ask these guys have been researching the blockchain space, Bitcoin, renewable energy, and a host of other things. And we've just been talking about the paper that they put out there that we're big fans of, the positive externalities of Bitcoin. And I want to shift to doing some lightning questions just about blockchain in general and sort of how you guys think about this. The first is proof of stake versus proof of work.
You can take that one. I know you have.
So, all right, here's the question. So, the most of the energy around the development of proof of stake initiatives is based on the fact that, the proof of work algorithm is wasteful. And we've just been talking about the fact that, well, is it wasteful? Yeah. So what's your take on proof of stake and its viability, and is it more secure than proof of work?
Yeah, we've been kicking this one around, at the office for a really long time now, right? And
it's probably the first topic that when
you started with.
We got together back in January, December, that we really did a big deep dive on was proof of stake as the next frontier of crypto mining. And so, I'll let you.
And I think as we continued researching this topic, what we quickly realized, look, there's no wrong answer, right? At the end of the day, it comes down to the specific application that we're talking about, right? So what are you using that blockchain for, right? If we're talking about money, if we're talking about a currency, and if we're talking about a global reserve currency, which is what Bitcoin's ambition is to be, then there's nothing cheaper and more efficient than proof of work, right? And the simple reason why is proof of work is the only thing that connects the digital Bitcoin world to something physical in real life, right? To something that is scarce, time and energy, right? Proof of stake, it's just not possible, right? Think of it this way, right? In the case of a proof of stake protocol, right? Who says it's fair that the creators of this protocol can continue, having this non-dilutive, instrument for as long as the protocol exists without putting in any additional work?
The other thing is, do you also lose the advantage or the beauty of the network effect? Because the network effect of proof of work actually creates a whole host of positive and negative behavior, all of which help the network, which we've been talking about. Can you get that same thing out of proof of work? Out of proof of stake, as far as you can tell?
Again, it comes back to the application, right?
So you're talking about profit motive, I guess it would depend on the application.
And
that makes sense.
I think there is a little bit of that in a different sense, because proof of stake, because you have to actually stake the underlying coin that you're talking about. You create long-term stakeholders, right?
Right.
So maybe it's not expanding the network effect, but it's creating a more
tighter affiliation, stronger
participation within that. So
that's an advantage.
So that's a little bit of an advantage, right? And the other advantage that we've talked about is kind of the things that you can do around POS, which are governance stuff, right? Yeah. So on-chain governance or in general. But to Saad's point, it really depends on what the protocol's underlying objective is, and whether scalability is the most important thing with some of these platform protocols like Ethereum and whatnot, or is it security? And depending on what is the underlying use case or the most advantageous use case, I think the consensus algorithm that you use will be in line with that.
Okay, well, we can. This is definitely one of those one we can go as a whole podcast. So let's talk about STOs versus ICOs, right? And you guys are all in for from an institutional perspective. So just take us from day one. So as ICOs, we all understand sort of probably why that happened, right? Yeah. You talked about this liquid asset, and but STOs are sort of bringing us back to combining this, innovation with good old-fashioned financial services, regulatory, that sort of thing. And do you think it takes hold as a result? Because people will say, well, this is just what we've been doing before. Is it something fundamentally different that ultimately creates something new?
Yeah, I mean, it's, just to give you an update, STOs are the current research piece that we're putting together. So it's very, very topical that you bring this up. without a doubt, the ICO phase of 2017, in our opinion, was egregious and unhealthy for the whole industry.
Right.
But that's what happens when you have capitalist nature at work.
Absolutely.
Right?
No question about it. We were at an event last night, and it was a panel, and one of the investors was talking about folks that were presenting ICOs to him. And he was like, no, you're not supposed to say that to me. You can't tell me. He's like, I guarantee you can't say that.
There's certain words. God, there's certain words that you know,
it was pretty amazing. But the ICO guys were saying all these things that you're not supposed to say.
Yeah,
pretty funny.
And that's kind of what happens when unregulated gray area comes and people take advantage to the full extent. And there's a lot of egregious behavior and a lot of scams, for lack of a better word, that were put out there. And I think it's taken a big chunk of the positive momentum that the industry was garnering and going with, and took a little bit of the steam out of it because of all the people that got burned. Right now, the issue is now the STO, right? And
so tell us about that.
When it's funny, a little story when me and Saad were getting together, and he was educating me on the crypto world and what these tokens actually were and what an ICO actually was. I think the first 5 or 6 that he highlighted to me, my baseline question was, so how does that make money? Like, how does that make money? What is what they're doing going to make money, right? So why would I own this token, right?
Right. At the end of the day, the business has to actually be a viable business for the token to have value.
So, all of the advantages of using a blockchain-based community to crowdfund or raise capital or fund your project or business are uniquely big advantages of blockchain, and that will never change, and that's what the upside is. Now, what are the assets or the companies that are using this mechanism? That's the biggest thing that hopefully will now be different when the STOs come around. So if you're actually having actual companies with actual revenues, business models that are using this new mechanism that's a token, a digital token, to access an investor base that it's global, that cuts the cost for issuing equity. So you have a lot of smaller, mid-sized companies that now have access to pools of capital on investment terms that are more favorable, because they only can't go to 1 or 2 or 3 private equity or venture capital firms. And so they can
takes it from a local fundraising process to
those are all great innovations of blockchain and the ecosystem that should be used to its fullest. And our hope, or our part of writing this STO paper, is to educate the wider industry as a whole as, hey, these are the benefits, this is how it should be done, let's learn our lessons from the ICO craze and really put the right companies, the right assets, the right type of deals to STOs at the beginning that will not put another black mark on the industry. And so we really think the STO model and STOs is the path forward. And I hope another ICO never gets done and everything is now an STO. And that is the proper way of doing things. And if that we start seeing a pipeline of deals come to the market in the STO world that are legitimate and are successful, it's going to open the floodgates, because there's a whole host of companies out there that really need access to this space and this funding and this mechanism of raising capital with lower cost, higher transparency, and wider capital base, right? So it's a great innovation, and it just needs to be done properly.
Cool. Here's another question. Does mining have a role in proof of stake?
No. Well, technically, okay, so it depends how you look at it, right? There are proof of stake are technically miners as well. Right. So it's similar in a sense that,
or forgers, I think forgers is
whatever the word is. They're all competing for the same reward. So the mechanism is similar, but with respect to miners with actual hardware, in a pure proof of stake environment, no.
Got it.
But what we think might be a popular choice is a hybrid consensus model. So we were just talking about Decred, right? Yeah. Where they have an underlying proof of work model where miners are working just like they would on Bitcoin. And that function serves as the timestamp, that 10 or whatever minute block interval that they have, securing those transactions. And then the finality of those transactions, that added layer, comes from the proof of stake participants. right? So they've got both of those consensus mechanisms built in, and it takes the pros and cons of both. So
interesting.
I think Ethereum's proposal, Casper, initially is actually a hybrid model as well. So we'll see how that actually plays out on a bigger scale with Ethereum and all the network participants.
Interesting.
And in that case, miners still have a play. But it's interesting because the signal that we're getting from Ethereum miners and Ethereum mining hardware producers is that Ethereum will never go proof of stake. Yeah. In fact, they're going all in.
That's funny. I was going to ask you whether do you think they're ever going to go proof of stake?
Again, we don't know. We're only hypothesizing, but these guys are investing capital on building ASICs for Ethereum, and they're continuing to build ASICs for Ethereum.
Because they believe that they're never going to go proof of stake.
So, and a new company called Lindsay, I believe that's how you pronounce it, out of China, basically. There was one of the lead devs from one of the big mining companies that we all know from. She left to start this company, and she raised $4 million, and they're developing an Ethereum specific ASIC chip.
Wow!
And so she's going all in on the fact that Casper is not going to be deployed out.
It's not going to happen.
And if it does happen, it's going to happen years from now.
Wow!
So I mean, there's real companies and real capital putting the skin in the game, as we say. Yeah. Betting that it's not going to happen.
So. Right.
Yeah, and I can understand that sentiment because the first iteration of proof of stake in cryptocurrency was actually 6 years ago.
Yeah.
With Peercoin, and if we don't have a successful iteration yet, then, what are we waiting for?
Right. That's a good point. Yeah. Maybe just too early, or it's just not the right time. Yeah. What's your take on? So we've been talking about sort of the lowest level of the blockchain stack, if you will, Internet 3.0, however you want to call it. So we're at the mining level. We're talking about protocols. What's your perspective on distributed applications? Are we really at a state where that's really an industry yet?
If you look at the numbers and the actual usage of users, it's still early infancy stage.
Right.
But that's what you really need to actually develop the ecosystem as a sustainable, for the future. We were talking about this the other day about Ethereum specifically, and Saad was saying, I don't see any other, platform-based protocol kind of overtaking them and whatnot. They've got such a, advantage in terms of being first mover. They've got millions of dApps already built out on them. The others are like EOS and whatnot are just playing catch up. And I said, and I go, but
there's probably some fatigue too around.
Yeah, but
should we finance yet another one to see?
Well, that's the thing. But my point was, it just takes one app. You just need one
killer app, exactly.
And it doesn't matter what platform it's on. That platform now will then be the default.
That's going to be the default, exactly.
The lottery ticket, as we say, is still out there. No one's found it yet.
Nobody's won it yet. So we'll keep doubling down.
Yeah, and without a doubt, though, DApp development and DApp ecosystem adoption is the single, linchpin in this whole thing. And hopefully we see that grow. Cool. And if it does, and when it does, then we'll see a burgeoning ecosystem that's going to just take off.
Yeah, and look, the important point is that we need to stop financing and developing more protocols.
Right. That's exactly what I was saying.
Got too many.
We got enough protocols, right? Like
it's time to start building these applications.
Start building the applications, successful ones, and focus on finding the best use cases.
Exactly. Right. And an economy only needs so many railroads, right?
Exactly. That's right. That's right. How many railroads do you really need? They all end up connecting to each other at the end of the day. Guys, this has been really fantastic. Thanks for taking the time. Well, we'll see you guys soon on our next podcast. Thanks for joining us. See you soon.